Hi guys, it's time for another video on Cryptogalaxy. Before you rush into crypto, you should understand that there are highly volatile digital assets with equal chances of making a fortune or going bankrupt. The cryptocurrency craze is spreading like wildfire, gaining widespread acceptance and attracting investors and traders from all walks of life. Such is a frenzy that the global crypto market cap recently surpassed $3 trillion for the first time. Suddenly, everyone wants a piece of the cryptocurrency pie. In today's video, we'll talk about the top 10 mistakes that cryptocurrency traders make, and if you're new here, please subscribe and turn on the notification bell to receive future videos like this. The first common mistake is investing because a coin's value or worth just went up. One of the most common mistakes that crypto traders make when investing in cryptocurrency is purchasing a coin solely because its price or market share has recently increased. The majority of crypto values increases, however, they don't usually last long. The value of cryptocurrencies fluctuates drastically due to the nature of the industry. Take, for example, Dogecoin. In October 2021, its value increased significantly from 0.234 to 0.308 per coin. Many saw this as a positive sign for Dogecoin, but the excitement was short-lived. Only a few days later, its value had returned to where it had begun. Dogecoin has also seen significant gains as a big one of the big names promoting it, such as Elon Musk. But such price hikes usually come and go in less than a week or two, so it's important to think twice before relying on such a sudden increase like this. The next common mistake is investing before researching the coin. It's natural for criminals to try to take advantage of investors when an industry booms, and the crypto industry is no exception. The creation of scam coins, also known as shitcoins, is a hugely popular scam right now. This entails launching a coin, promoting it, sometimes with the help of celebrities or social media influencers, and then abandoning ship once a sufficient amount of money has been invested. Squid Coin, which was launched following the release of Netflix's most popular show in history, Squid Game, is an example of this. This cryptocurrency managed to raise approximately $3.4 million in investment funds before the developers pulled the rug out from under them and made a run for it with all of the money. Unfortunately, it's common for more inexperienced investors to fall for scams like this, and there are millions of such individuals out there right now. So to avoid investing in a risky coin, it's always good to thoroughly research the company first to know exactly who you're dealing with. Another common mistake that crypto investors make is investing in just one type of crypto. There's nothing wrong with starting with just one type of cryptocurrency. Everybody has to start somewhere. People, however, frequently make the mistake of relying solely on one coin, and no matter how promising that coin appears to be right now, putting all your eggs in one basket can be risky, especially in the world of cryptocurrency, where a coin can skyrocket 1 minute and then crash the next. As a result, investing a significant amount of money in just one coin is not a good idea, especially if you're new in the crypto industry. Try getting acquainted with a variety of coins first. Refer back to the previous point. Research before investing. Another common mistake is buying a coin because it is cheap. While this is totally understandable, it's sometimes a lot more worthwhile to invest in a fraction of a coin that's got a reliable future. People often make the mistake of buying multiple coins for a lower price, but this can often result in putting your money in less established and therefore less promising coins. Of course, the opposite may also be true, so be aware of this before you decide which coin to invest in. Never forget that a coin's price has no bearing on its potential growth. Don't chase after cheap coins with the hope of making millions. Many inexperienced crypto investors buy low-priced cryptocurrencies because they believe they have a better chance of making a profit. When looking for gems, the market capitalization is a better factor to consider. The market cap is a more accurate indicator of a coin's worth. To avoid making a bad investment, you should look into the top 10 cryptocurrencies available right now. The next common mistake on the list is buying during a spike. When the value of a cryptocurrency skyrockets, many new investors believe it will continue to rise. They put a lot of money into it, which usually results in a loss. They frequently end up buying at the top of the peak before the value begins to fall, resulting in larger losses. It's not uncommon for cryptocurrencies to expect and experience an artificial spike that quickly corrects itself. It is critical that you do not get caught up and buy during the spike. You'll lose a lot of money before you begin investing. Spend some time learning how the market works and what the current trends are. This is one way to avoid a mistake, and you can save yourself all the trouble. Another common mistake is falling for the hype. The influence of social media on cryptocurrency trading and investing is significant, so it's no surprise that investors and crypto creators go to the great lengths to hype up a token. This occurred frequently during the 2018 crypto crash and continues to have an impact on investors to this day. Be wary of information that appears to be too appealing when using social media. Articles which titled, "Bitcoin made me a billionaire," or "Ethereum is going to skyrocket in value," are frequently deceptive. Not saying cryptocurrency can't make you rich or that Ethereum's value won't rise. However, more often than not, media hype causes an investment bubble, causing the value of a cryptocurrency to skyrocket. As a result, long-term investors sell in order to make large profits, leaving other investors with a stock that will not be profitable. When Bitcoin surged in 2017, this hype resulted in many fortunes being made. This resulted in a financial ruin for those who had not sold before the bubble burst. You should also be cautious of new crypto tokens, which appear to be the latest craze. Again, the hype will most likely drive up the price, making it an appealing investment prospect. Often when the dust settles, it turns out to be false. The best thing to do to combat hype is to familiarize yourself with the crypto world by reading expert blogs as well as information available online. It will allow you to invest in cryptocurrencies that you fully understand and help you make informed investment choices. Another common mistake is emotional investment. Emotional investment is a common blunder made by new cryptocurrency investors. This simply means making hasty decisions that are not supported by facts. Bitcoin, for example, is extremely volatile with significant ups and downs. It is critical that you do not panic and sell all your Bitcoin because you've noticed a minor dip that will most likely correct itself in a few days. Emotional investing is one of the simplest ways to lose all your money, so avoid it at all costs. Next is short buying and selling. The majority of people who made a lot of money from Bitcoin were long-term investors who held on to coins for a long time before selling them at a higher price. Cryptocurrency prices can fluctuate dramatically in a short period of time. This is because many investors buy and sell in short bursts before moving on to another coin and repeating the process. To get the most out of your investment, diversify your trading option and consider long-term growth projections. Short trading is an excellent tool to have in your arsenal, but you should also actively seek out long trade opportunities. The cryptocurrency market attracts a large number of inexperienced investors. This means that many people sell quickly because they are concerned about price fluctuations. As a knowledgeable and experienced investor, you will want to look for indicators and indicate whether it is time to buy or sell. Then, to trade effectively, stick to your overall knowledge. Another common mistake that crypto traders make is not reading and analyzing crypto charts. Get to know the market you're trading in. Learn as much as you can first, then expand your knowledge as you go. The adage, knowledge is power, has never been more true in the cryptocurrency world. Understand the price charts, identify your investment window, and then use your historical data alongside your carefully researched projections. If you follow these patterns, your cryptocurrency investment life will be very profitable. Lastly, overtrading. This is a common blunder made by new cryptocurrency investors. Some investors want to execute up to 20 trades per day. It's perilous. Many of them eventually lose due to fees or because they made bad trades and then trade more to recover losses. The reality is that excessive trading leads to poor decision making and higher trading fees. To summarize, trading from a position of knowledge, scrutiny, and security, as well as having a diverse investment plan, will produce the best long-term results. A prospective investor should be aware of the best cryptocurrencies to trade this year, as well as other viable options. You'll be more successful in your cryptocurrency investment journey if you can avoid these blunders. And that brings us to the end of today's video. Thank you so much for watching. Please like, subscribe, turn on the notification bell if you want to see more videos like this. While you're here, watch one of the other two videos on your screen and we will see you later.